Hey, have you ever pulled up a stock chart and felt like you were trying to read some kind of secret code? Well, you're in the right place. Today, we're going to demystify those squiggly lines and show you how to read the story they're telling. Yeah, that feeling when you open up a chart and it's just this chaotic mess of lines and colors. It's overwhelming for sure, but believe me, you're not alone. Every single trader has been there. But what if I told you there's a really simple 3-step way to cut through all that noise? By the end of this, you'll have a clear framework you can use on any chart you see. So let's dive right in. So the foundation for everything we're going to talk about is something called price action trading. All that means is we're focusing purely on the price movement itself. No need to get bogged down with a bunch of complicated, fancy indicators. And really, price action trading boils down to 2 core ideas. You can either trade with the flow of the market, or you can try to trade against it. Let's break down what that actually means. So you've got trend trading versus reversal trading. If you're just starting out, which path do you think you should take? Think about it this way. Trend trading is like swimming with the current. You're just going with the flow, which makes everything way easier and puts the odds in your favor. Reversal trading, on the other hand, is like trying to paddle up a waterfall. Trying to guess that exact moment a market will turn around is incredibly difficult and super risky. So, for beginners, the message is loud and clear. Always trade with the trend. All right, so our strategy is set. We're trading with the trend. Now let's get to the real meat of this explainer, your simple 3-step plan for looking at any chart and knowing what to do. Here it is, simple as this. Step 1, figure out the trend. Step 2, mark your floors and ceilings. And step 3, draw your trend lines. Let's break down each one. Step 1 is all about asking one simple question. What is the market actually doing? It can only be doing one of 3 things. An uptrend, where prices are moving on up. In that case, you only look for chances to buy. A downtrend, where prices are falling. There, you'd only look for chances to sell. And then you have a sideways market, where it's not really doing anything. And for a beginner, the best advice is to just stay out. Don't try to force a trade when there's no clear direction. Okay, step 2 starts with something called support. The easiest way to think about this is like a price floor. It's a level where the price seems to stop falling, hit this invisible floor, and bounce back up. And if support is the floor, then you've got resistance, which is the ceiling. This is a price level where the stock seems to hit its head and can't go any higher, often getting pushed back down. Now for our final step, drawing trend lines. And this quote says it perfectly. A trend line is basically just a dynamic support and resistance. So instead of a flat floor or ceiling, it's a sloped one that follows the price as it moves. Now listen up, because this part is absolutely crucial. You can't just draw lines on a chart wherever you feel like it. A valid trend line has to be logical. It has to show you a clear boundary that the market is actually paying attention to. So how do you know if your line is logical? The key is to connect the maximum number of points. The more times the price comes down and touches or bounces off your line, the more significant that line is. It proves other traders are seeing the exact same thing. All right, enough theory. Let's get our hands dirty and see how this all works in the real world. We're going to apply our 3-step plan to an actual stock chart for Tata Motors. So step 1, what's the trend? Looking at this chart, you can see that while the stock was in an uptrend, the most recent short-term trend is clearly pointing down. So what does that tell us? We should be looking for selling opportunities. On to step 2. Let's find our floor and ceiling. You can see a pretty clear resistance zone, or ceiling, up here. The price keeps hitting it and getting knocked back down. And then, way down here, we've got a key support zone, or floor. And finally, step 3. We can draw a nice trend line connecting the highs on the way down. See how the price was respecting that line, bouncing off of it? But then, look what happened. It broke right through it, confirming that the trend had really shifted downwards. By the way, that thing we just saw where the price smashes through a floor or a trend line, that has a name. It's called a breakdown. And it's a really strong signal that the sellers are in control and the price is probably headed even lower. So there you go. Just like that, you've gone from looking at a confusing chart to actually performing a structured 3-step analysis. Now, this isn't about predicting the future with a crystal ball, okay? It's all about putting the probabilities in your favor. Let's just run through the plan one last time, super quick. First, identify the trend, up, down, or sideways. Second, mark your floor and ceiling, your support and resistance. And third, draw your trend lines, always aiming for the maximum number of touches to prove they're legit. When you follow these 3 steps, the chart is no longer just a random mess of lines. It becomes a story about the battle between buyers and sellers. And now you have the tools to start reading that story. So the only question left is, what will the chart